Okay, good morning, everyone. We're going to make a start now. Thank you very much for joining the LaingBuisson's Health Cover UK Market Report launch, the first by webinar, I believe. So welcome, and hope it goes well and hope you enjoy it. We are going to be recording the session, and the slide deck that will be made available to you after this session. My name is Dave Middleton. I am chairman of AMI, the Association of Medical Insurers and Intermediaries, which represents all the major insurers and intermediaries in the private medical market. I'm also MD of a company called Benefit Advisory Service, which is an international employee benefit company. I'd like to welcome onto the panel William Lang, founder and executive chairman of LaingBuisson. William will be presenting the report in a few minutes, and we'll take around about 15 minutes to present. We've also got Neil Atkinson, Proposition and Innovation Leader at Mercer Marsh Benefits, and Mark Allen, General Manager of Business and Specialty Products at Bupa. So the webinar will last for around about an hour, and as I said, William will start his presentation in a minute, and it will last for around about 15 minutes. We'll then go to each of the panelists for their thoughts on what William has produced, and then we'll open it out for discussion and questions via the chat. There will be a couple of polls along the way, so we can give you some more data. And I'm very glad that Jade Cummings is running our tech in the background. So thank you to Jade for all the help in preparing. So without further ado, I'm going to introduce William, and William will go through the report.
Thank you very much, Jade. I think I'm on, yes, my camera is working at the moment. Thank you, Dave, and welcome to all the participants. And this is a launch of our health cover report. The published version actually is not quite ready yet. It'll be available in about a week. All of the slides which I'm going to show you are fully complete, so you'll get a good overview of the highlights of what's been happening as far as we're concerned in the health cover sector. Now, for a variety of reasons, which I'm not going to bore you with, we are rather late. We would normally hope to produce information from our survey of health cover providers within the calendar year after the survey to which the survey relates. We are late here. We hope to get back on course with next year's edition and to cover 2021 before the end of 2022. And of course, things have happened since 2020. Our understanding is that there has been some increasing activity within the healthcare sector. Bear in mind that this covers 2020, which was the COVID year, and that's what we're going to be producing today, the series up until 2020. So let's go into the first slide. And can I also say that I've been helped with this with my colleague Rico Scandelius, who was until recently the Operations Service Director of Bupa Insurance, and he will be moving into prime place for the subsequent edition of this report. So this first slide just gives you an idea of the overall scale of health cover. And the way in which we define our market, the scope of the market, is private medical cover, which is PMI plus self-insured, health cash plans, dental insurance, and dental capitation maintenance. There's no specific item of data for wellbeing products, but more about that later. So here we have the total market value 2020 of £6.1 billion, which is quite chunky. And of course, this is not only relevant to the insurance sector itself, but also relevant to the private hospital and other private specialist services that receive a lot of their funding from insurance. And I believe that there are a number of people from that sector involved in this launch as well. So by far the biggest segment of the market is private medical cover, PMI plus self-insured. 5 billion pounds. The others are all relatively small scale, but still significant. So let's go on to the next slide, please. And this is simply to say what I'm sure everyone will be aware of, that the largest share of the private medical cover market is now company paid, but there's still a substantial element of individual pay as well. What the slide also shows you is the division, in the case of company paid, between the PMI, at 2.4 billion roughly, and then the large corporates who are involved in the self-insured side of roughly 900 million pounds, making a total for all private medical cover of 5 billion. So let's go on to the next slide, if we could. What I thought to do is just to give a bit of background. I mean, people I'm sure will be aware of this. It's what's been happening to the NHS during and before, during and after COVID. This gives the history of waiting lists and waiting times since the mid 2000s. Just to draw your attention to the right at the beginning of this, because waiting lists, of course, have been with us, long waiting times have been with us before. People will remember, and what this slide shows is the sort of tail end of the Labour administration, where Tony Blair and Gordon Brown together actually did successfully cut waiting lists and waiting time way down to 6 weeks. And you see, back in 2007, there were still some very long waits because it took some time to get through. And then we had a long period post-Labour in which waiting times were around about 6 weeks or a little bit high, but they've been rising to about 8 weeks, and then suddenly here we get COVID, big spike, and then waiting times now up to 12 weeks. So the point is that the private cover sector exists within a time now of deteriorating NHS performance in terms of waiting times and waiting lists. And it's not something that's going to disappear quickly. COVID was reinforced this, but we're all very well aware that waiting times are not going to come down very quickly in the future. We have constraints on staffing. We have long waiting times before new staff becomes fully on stream. We also live in a time post-Brexit when we can no longer fill vacancies so easily with overseas staff. So deteriorating NHS waiting times in general. Next slide just goes on to take another specific example of this, which is first cancer treatment. Again, we see the pattern that COVID didn't help. It certainly reinforced existing trends, but those existing trends were already there before the COVID year of 2020. In other words, deteriorating NHS performance. And of course, that, other things being equal, should be reinforcing demand for private healthcare. We haven't seen it yet come through, or at least not till 2020. 2021, we don't know yet, but the future is yet to be seen. So let's have the next slide, please. This is a slide about taking a long-term view of the value of private medical cover, the spending envelope. Now, in 2020, we've calculated the overall spending envelope on what we call a counterfactual basis. It's a basis upon which of what the spending envelope would have been without COVID disruption, and we've calculated this by expressing the value of demand for PMI as being before any rebates, and then the value of self-insured medical expenses schemes as being what it would have been if COVID had not been there to reduce claims substantially. So I think this is a fair way of presenting it, because it indicates it continues the trends on the same basis as they have been over the past 20-25 years or so. And the things to pull out of this is, first of all, there's an obvious watershed here, and the watershed is the the financial crisis of 2007 to 8 and the ensuing UK recession. And it's pretty clear there that after the financial crisis, in real terms, the value of private health cover has not changed at all. In nominal terms, it has been increasing by about 1.8% per year, CAGR, but in real terms, there has been no increase in the value of private medical cover since 2008. And you see, before that, there was really quite a trend in a really quite substantial growth rate from 1995 to 2008, pre-global credit crisis. And the CAGR there was actually 4%, over 4% in real terms and 6% in nominal terms. So there's been a big change, obviously, since the financial crisis, and we haven't come out of that sort of plateau that's in spending that happened then. So let's go on to the next slide, if we could. It's just a confirmation of what's happened in the COVID year. That this is data which comes from the private healthcare from PHIN, the Private Healthcare Information Network, and it shows that there was a big dip in claims or in admissions in the first months after March when COVID hit, but then recovering quite quickly in the subsequent 6 months before dipping again at the second wave. So it wasn't as if private healthcare was obliterated throughout the whole of 2020. It did recover. Next slide, please. So gross margins. The impact of COVID and the reduction in claims rates meant that, depending on how you calculate it, the gross profit margins of health cover providers jumped to an exceptional level of 37%. But this is, I must stress, before the rebates and before taking account of any additional demand that may come through in the subsequent year. I think possibly of more significance is what has happened to gross margins or loss ratios in the 5 years before that. And you'll see from this graph that it went up over those 5 years from being around about the low 20% up to 27% by 2019. So the question is, what is the appropriate level? What do we think the appropriate level is for gross margins or loss ratios of private medical cover providers? So let's go on to the next slide, if we could. And here we go, going away from value and towards volume of demand for private medical cover. Remember, this is PMI plus self-insured together. And again, you'll see this watershed at the financial crisis of 2008. In fact, there were two watersheds that I can see in this. The first one took place in with the recession of the early 1990s, and the second one with the recession of 2008. I think it's quite significant that, in fact, the long-term trends in demand for PMI have sort of coincided, changes, breaks in them have coincided with what's happening in the economy in general. So replacing rapid growth from 1976 to 1990 with slower growth, 1990 to 2008, and then you get this dip in the number of subscribers, which actually we're still, even 2020, in terms of subscriber numbers, we're still below that 2008, 2009 peak. And in fact, if you think of this in terms of penetration, the penetration of PMI, after taking in the dependents as well, has gone down from a peak of 12.4% of the population in 2008 to 10.6% of the population in 2020. And the other thing to note from this chart is how company paid has increased more rapidly than individual pay. So that trend continues up into 2020, and how that the company paid segment in itself has shifted towards self-insured as more healthcare trusts have been formed to take part of this demand, which simply because it's more efficient. So move on to the next slide, and here we're moving away from private medical cover and going to the health cash plan contributors, and this is the volume of demand, number of contributors. In fact, it says 75 to 2021. In fact, it's 2020. But you see there that the demand sort of has been gradually declining, jumping up a little bit down. But again, here you see a bit of the watershed in 2008 and a dip following the recession. And then a recovery around about the middle of the teens. And this recovery is entirely due to the rise or the resurgence of company-paid health cash plans. And the market has very much moved away from individual pay to company pay, which is the area of growth which continues at the moment for health cash plans. Move on to the next slide. And this, we're moving into dentistry now, into dental capitation plans. And here we see a market which is gently declining. The number of people covered by dental capitation plans is around about 2.5 million by 2020. It remains a niche product. Penetration of 3.6% of the population in 2020, compared with a little bit over 10% for private medical insurance. So it's a niche product, not rising at the moment. And we go on to the next one, which is dental insurance subscribers. That's a bit different. That is, in fact, rapidly growing, but it's rapidly growing from a very small base. So the value has reached about 140 million pounds now. You'll see that in terms of population penetration, it's around about 1.4% of the population. So still very much a niche product, but rapidly growing. So the next one. This, I think, is just to emphasize how much the PMI sector is highly intermediated. And the results from our 2020 survey show that overall, taking company and individual pay combined, that 73% of new business was intermediated, and that's higher, in fact, for company pay than individual pay. For company pay, it's over 80%. So very much an intermediated business for new business anyway. Okay, so let's go on to the next slide, and this is to do with the market shares. Now, we are limited in what we can say about market shares from the permissions that we have from health cover providers, which obviously we must respect. If you focus on 2020 there, the Bupa remains the market leader with about 35% market share. AXA PPP second, so I would view this as being effectively a duopoly. You know, we have Vitality and we have Aviva there, but they simply don't have the same clout. I'm sure that the two insurers would question that, but they don't have the same clout as the two market leaders. Not much change in market share since 2017. We can't say anything about the market shares for PMI separated out as a segment, as opposed to healthcare trusts or self-insured separated out as a segment because of permissions. But what we can say, and which I think everyone is aware of, is that Bupa is a leader in PMI and AXA in self-insured. But we're only able to produce the data on that insofar as we have permissions to do so. So let's go on to the next slide. And Rich will do a few words about market potential for private healthcare products, because as I said before, we're in a position now in which the deteriorating performance of the NHS would lead one to suppose that there is potential for quite substantial market growth. But at the same time, we've entered into an economic situation in which there are great uncertainties. Certainly, when we think about individual pay, the counter driver of the cost of living crisis is going to be significant for individual pay during 2022. The health of companies, which fund most of private medical cover, is another matter. It may well be that there is sufficient profitability within the corporate sector to support demand going forward. But we don't make projections, or I prefer not to make projections because they're hostages to fortune, but we have two balancing effects at the moment. But at the same time, I just draw your attention to what are called well-being offerings. Now, at the moment, there aren't really any freestanding well-being offerings. They're add-ons to existing health cover. But it seems to us that the potential company-paid market is massive if effectiveness in meeting corporate objectives can actually be demonstrated. When I see corporate objectives, I'm thinking particularly of the holy grail of being able to better control absenteeism and indeed presenteeism. And digital tech and big data analysis, if we can actually demonstrate the effectiveness of these any potential health cover or well-being products, then digital tech and big data analysis may well prove to be key to this. So I think that's my last slide, Jada, I believe. Yes, it is. So thank you for your attention, and I'll hand back to Dave.
Thank you, William, for that. It's very insightful and very interesting. I've got a couple of questions that have come in while you've been speaking, so I'm going to direct those to you if that's okay. The first one is there a slide or any data extrapolating all of these trends over the next few years?
So hostage to fortune. So we could do that, but we haven't. And that follows what we do in all other market reports. I know that there is a demand for this, but obviously all we can point to is the direction. And I would hate to have to quantify this and be proven wrong, because if you take 10 economists and ask them to predict the future, you'll get 10 different versions of which one or two may be right. So we don't do it.
Okay, thank you. That was from an anonymous attendee. We've got one from Ted Townsend. Hopefully you don't mind me mentioning you, Ted. What is the definition of company paid self-insured? Is this self-employed individuals buying PMI through their company or something else? Well,
thanks for that question, Ted. And I forgot to mention, by the way, that Ted's in fact organising a conference for us in October the 12th on private acute healthcare, which there are going to be 2 sessions on health cover. So hopefully we may give you a bit of a plug for that. But in answer to the question, Ted, the self-insured is that element of what was previously private medical insurance that is no longer covered by insurance contracts, but it has been transferred over to what was known as healthcare trusts in the lingo, in which the healthcare providers offer administration services to healthcare trusts, which have created a fund which is tax efficient to pay for that employer's medical expenses. So basically, the self-insured is the sums of money that these healthcare trusts set aside for medical expenses schemes, plus the administration element that the cost of administration that the providers put into it.
Thank you, William. Hopefully that answers your question, Ted. Please keep coming with questions as we go through, and I'll direct them to whichever panel member I think is appropriate. Just a few points from me, William, on your presentation. I think it's the concerning but not surprising to hear about the NHS waiting lists. For me, I get very frustrated with the apparent lack of appetite from the government to really engage with the private sector to help reduce it. I'm actually talking to the CBI tomorrow with regard to lobbying certain ministers on this. So it'd be interesting to see what they say with regard to growing the market. Gross margins is an interesting one. I'm going to bring Mark in on that when he speaks. For me, I think the industry, the insurers reacted very well in terms of providing rebates. But yeah, it'd be interesting to see what margins potentially look like moving forward. I'm pleased to see that 73% is intermediated. Obviously, I believe quite highly in that, in the role I do. In terms of company demand from our members and individual demand, we are seeing that's increasing, which is good. So it'd be interesting to see what comes out in 2022. What frustrates me so much is that there are people still not joining company schemes because of the P11D benefit. I think it's quite ridiculous that that still applies to this market when it doesn't apply to others like group life and income protection. In fact, it would be good if I just threw in a poll there. Jade, could you throw in that poll on that and see what everybody else's thoughts are, just so we can get some more data? So that's the question on there. If you could answer yes, no, or don't know, please. I've just tried to vote myself and it said I can't vote. Jade, have we got the results? So 53% and 44% don't know. So yeah, that's interesting stats. Thanks for that. Just finally from me on the wellbeing offering, there's a lot of confusion if we talk about mental health for me in the offerings that are out there. If I'm an employee and I've got an issue with mental health, for example, where do I go? Do I go to my standalone EAP? Do I go to the one that's linked to the group life, the income protection, cash plan, whatever, or do I go direct into my medical insurance? If there is something that can pull it all together, for me, that would be fantastic. And I'm going to throw that back into Neil in his role as proposition innovation at Mercer in a minute, Neil, when we come into you. That would be great. Okay, so firstly, thank you again, William. We'll come back to some questions which are firing in a minute. I'm going to hand over now to Mark. Mark, if you can briefly introduce yourself, and then if you can maybe come in with your thoughts on what Neil said, what William said, and answer my question about gross margins, that would be great.
Brilliant. Thanks, Dave, and good morning, everyone. Delighted to be here. So I'm Mark Allen. I'm the General Manager for Bupa's Business and Specialist Product Business. Basically, what that means is all of our employer-paid PMI business and all of our dental insurance and cash plan business. So really interested to see the report this morning. I think my observations when I stand back and look at what's been said are no real big surprises in there, but some really interesting insights, which I think do lay the pipe for perhaps what we have already seen in 2021 and what we might see in 2022 and beyond. Clearly, the company paid dominance in the market continues, and no surprises there. I do think there's something for us to reflect on as providers around the critical importance of the role of the intermediary, especially as this space gets busier. I think it's very easy for insurers just to think about what products they want to push onto employers, for example, but we need to work really closely with our intermediary partners to make sure that we're really doing the best thing by the client and complementing that. Clearly, NHS wait times, cancer stats, all very worrying. As a situation, I think we've got a role to play, as you've said there, Dave, around how we can complement the NHS. I think we've got to evidence some of our value that we add. So it's probably work to do for us as an industry on being able to evidence care outcomes better than perhaps we can today. But also, I think there's a factor around employers needing to have PMI in particular as a product in the war for talent. And we see a lot of evidence of that, where corporates are pushing us in particular around new innovation and wanting to broaden out their PMI offer, less about trying to make sure people are getting better or staying in the workplace, but as much about attracting people into their organization in the first place. Someone's mentioned it in the chat around dental. Don't think we should overlook dental, particularly dental insurance, really cost-effective option. And the dental provision market is in every bit as much of a kind of difficult situation as the standard NHS. So there's something there. And then we've talked about the wellbeing offerings, and Dave, you've touched on this, but it's something that's occupying a lot of our thought, really, about this cluttered landscape there is, whether it's mental health apps, wellbeing support, and how do you create a situation where the employee doesn't end up with 57 different apps on their phone and just clutter. And I think that's a really tough one for the industry to get their head around whether that means collaboration, or whether the role of the intermediary really comes to the fore there and being able to make sense of that for people. So, many more questions than answers, I think, probably would be my take.
And Mark, what are your thoughts on the gross margins? And I mentioned I did think that you reacted extremely well to give some rebates.
Yeah, thank you. We had a pre-meet, didn't we, where we saw the stats, and I was quick to point out, please don't let everyone think that was the kind of profit we banked. Obviously, we've paid back over £100 million, recognising that trend there. I think it's been great. We've had a lot of positive reaction from the market, as has the industry. And I think the private medical insurers largely have all really stood up and done the right thing there. We'll only really know what the true picture is, as William said, I think, once everyone's finished paying back whatever they're choosing to pay back. And also we've seen that kind of tail come through of any pent up demand. But with with some of the delays that's still there in the system, it could be some time. And I wouldn't want to be an actuary at the moment. I think trying to predict, claims trends going forward is very difficult.
Yeah. Okay, we've got a couple of questions in that you hopefully can answer, Mark. What would you say the trend is for PMI providers covering preventative private healthcare, such as yearly checkups and self-referred diagnostics?
I think anything that is about talent attraction, trying to keep people in the workplace, keeping people productive, happier employees, is absolutely going to be in demand. So whether that's the kind of things that the person asking the questions referring to, or simple apps, there is a massive demand for that. I think the question for PMI providers is, where does our role start and stop? And we have to try and work out where we're best placed and who do we partner with. So I think there's some big questions. People like ourselves and AXA have provision businesses as well, and how do we make that come together really effectively? But ultimately, I think it will be about how the employer experience and the employee experience is really made sense of, rather than just throwing more and more solutions at a problem and creating confusion.
Okay, and last question to let you off for a little bit. Is there any appetite amongst insurers to enter the self-pay market using their brand name and purchasing power with healthcare providers to help build attractively priced treatments to relieve those on NHS waiting lists?
I think it's definitely an area that we are curious about. Strong relationships with the provider market, and there's clearly a demand for people to take that option in terms of looking after their medical needs. So definitely something we're interested in.
Okay, thank you, Mark. I want to bring Neil in now. Neil, if you can give a brief introduction and then maybe pick up on my point about the wellbeing offerings, which I know you're really familiar with.
Sure, thanks, Dave. So Neil Atkins, I'm proposition and innovation leader at Mercer Marsh Benefits. I'm sure most people on the call kind of know who we are, but we provide broking technology and consulting solutions to about 17,000 clients in the UK. So I have the privilege of courting a number of the providers active in this space, in the wellbeing space. And I think it's safe to say that there's a real glut of providers at the moment. It's also worth probably kicking off with that technology and wellbeing are different. So we often think of those two circles kind of overlapping completely, but we've seen technology play an incredible role in the rise of virtual GPs. then the utilization of virtual GPs over the COVID period, as getting to your normal GP was harder, really ballooned, and that's kind of coincided with the insurers taking a bit more control over the pathways. So having this very rapid access to a virtual GP and then onward referral has been something which has been accelerated through COVID. If we move on to well-being, well-being is such a huge topic and far bigger than we can cover on the remaining 20 minutes of the call. But it is an extremely congested market, and a lot of the provider solutions that we see are unsurprisingly app-based. There are an awful lot of point solutions out there that are picking off specific parts of the well-being agenda. Our clients are very interested in diversity, equity and inclusion at the moment, and that DEI agenda is driving a lot of the new providers that we see in, for instance, mental health, women's health, neurodiversity, etc. So that's coming to the fore. But I think the original question was around the role of well-being and the extent to which you can have a piece of technology or a solution that can cover it all. And I've not seen it yet in terms of a single digital experience. Often digital experiences work better when they are kind of simple and pure, I would say. So we see point solutions addressing certain parts of the market, but in terms of a single platform, that's not something that we've seen. And just the final point, Dave, I would say is that the biggest hurdle for well-being and how you deploy that digitally is engaging employers with it, because there are an awful lot of solutions out there where you see quite low utilization within employer workforces, within client workforces. And that's going to prompt some quite serious kind of ROI questions a couple of years down the line. So we're definitely at kind of the start of that, or the steep part of that growth trajectory for well-being. But I think there'll be some casualties along the way.
Okay, Jay, can you throw in the thanks, Neil. Sorry, can you throw in the second question, please, about the well-being and whether people would be prepared to pay for an all-encompassing standalone wellbeing tool, whatever that looks like? Neil, I know you've got views on that. Neil, while people are doing that, how do you direct your clients in terms? So the example I gave earlier on of not knowing where to go, if I've got a mental health issue, what do you say to your clients about that? Because it's a minefield.
Yeah, it is a minefield. We do quite a lot of work with larger clients around mapping out the pathways. Yeah. Typically clients have I think it might have been you that alluded to this before. You'll have different access points for different treatment pathways, whether they're kind of MSK, mental health. You might enter a pathway via an EAP, you might enter it via your own GP, you might enter it via a virtual GP. So I think that having a client having a thorough understanding of how you can enter those pathways is really key, because what you need to do is connect the people with the need to a way in quickly and efficiently, and then get them to the most effective kind of intervention possible. But it's so manifestly different for all clients, depending on what provision they have in place already.
Yeah. Any thoughts on the poll?
What have we got? Rather than using I can't vote on this one, can I? Pay for? Yeah, I mean, it is that if there was an all-encompassing standalone wellbeing tool that was cost efficient and had completely kind of proven ROI instead of hard stats around in terms of hard stats around return to work, absence, productivity. I'm not surprised that that's it should be higher, arguably on that. Yeah. But I don't think that we're at that stage yet. Okay,
Neil, I know you wanted to talk about dental insurance, and because there's some interesting stats on there, weren't there, that William produced?
Yeah, absolutely. It was one of the kind of parts of the report which highlighted a sustained growth over time, which always kind of probably piques everyone's interest on the call. And it would be interesting to kind of dig into what we thought might underpin that. I mean, my thoughts would be that certainly over COVID access, and before that, access to NHS dentistry is becoming increasingly more difficult. And we've seen insurers, some of them might be on this call, taking a bit more of an active role in participating in the value chain of that as well, and creating more kind of joined up pathways and propositions. So I'd be interested to hear about what we think underpins that kind of slow but organic and sustained increase in subs.
Mark, do you want to comment on that?
Yeah, happy to. Definitely agree with the point about the NHS dentistry. That's absolutely a factor, I would say. I do think there's something about the price point of it as well. So we talk about wellbeing offerings that maybe companies are considering as a whole of workforce offering. Dental's in the same price point. And I think also we've started to try and really push the link between oral health and physical health, and a lot of the things that you can pick up from within the mouth, even extreme things like mental health, signs of poor mental health from a dental checkup. And it is a great benefit for us when we've got provision there as well, and some of the insights you can bring to that conversation. So we think it's a really big opportunity. And like I say, I think ultimately that price point where in the war for talent, where people are looking to try and find ways of offering more benefits to their employees to stick around against the backdrop of difficult NHS dentistry, that's undoubtedly what's kind of underpinning it, I think.
Mark, and some of your competitors haven't paid out rebates yet. Any thoughts on that? Chatham House rules.
Well, it's not for me to comment on what everyone else did. We took a view really early on in the pandemic, and I remember having numerous conversations with numerous brokers at the time about what we were intending to do. That we didn't want to make any exceptional financial benefit from that situation, and have been keen to honour that. Yeah, other people made pledges, not everyone, I don't think, and some have been quicker than others in paying back, and everyone's got their own reasons for wanting to see that tail come through. In terms of the quantum, I think there's a question there. I don't know. Our number, I think effective is about a month's premium is pretty much what we've paid back on average. So. People would have to do the maths themselves around why they are what they are, and like we said earlier, you'll only really see where this all ultimately lands in a couple of years' time. I think when you start to look at insurers' returns then, and you can see what was ultimately paid back and what levels of returns were made.
Great. I've got some more questions coming in, which I'll come back to in a minute. William, have you got any thoughts or comments on what's been said so far?
Yes, well, all very interesting stuff. And the one that particularly took my interest was in regard to well-being, the low rate of uptake by employees, which I think that's very significant, and yeah, very interesting.
Okay, right, let's have a look at some more questions. Some quite good ones in here, actually.
Just reflecting on that point you just made, Will, and on the whole well-being piece. One of the things which is really important, and we always stress this with clients, if they're really serious about this well-being space rather than engaging in a box ticking exercise, is to ensure that when you roll out something internally to your people, that there's, don't take it for granted. You wouldn't plant the seed in the ground and not water it in and take care of it and nurture it. So with anything like this, there needs to be launch, comms, engagement, and it's not a once and done thing. It's an ongoing thing. You have to reinforce that. You need to almost think of it as like an ongoing advertising, brand building campaign. Otherwise, these solutions don't create that kind of momentum.
Yeah. Neil, do you think there might be a danger of a sort of big brother negative response to more engagement by the employers?
Well, I mean, I don't know, maybe. We do a lot of work anyway with clients on comms and engagement. We have a practice that's dedicated to that. So, I guess you have a self-selecting group of clients that wants to really push this stuff out to their employees to demonstrate that they are caring. They do want them to make use of the tools and you know, I don't know whether it might be a virtual GP or a mindfulness app or a mental health app or whatever it might be. I think that if they make an investment in something, then they want to see the return on that investment, and the return on that investment is really only predicated on people actually using it. So yeah, I mean, yeah, that's what I'd say.
Yeah, Neil, your sound's gone a bit robotic actually, so don't know what's happened on that. You know, if I can just come in on the wellbeing, I've done quite a lot of work with clients in the past on this, and hopefully it's changing now. But I have seen that a lot of clients just threw stuff at their employees and didn't really actually survey and go and engage and understand what they really wanted, and therefore there wasn't a return for all the providers that provided all the wellbeing solutions, because it was just a tick box to say, I've got this, I've got this, I've got this, I've got this. I think there needs to be more work in terms of what really is the challenge that they're trying to solve.
Yeah. Sorry. In the news recently, there's been a big experiment by a number of companies who've got together to have a 4-day week in the hope that this will be demonstrated to be effective in terms of productivity over a period of time. Do you think there's any scope for the health cover sector to try to put together something in the way of a similar sort of experiment?
What, a 4-day week you're talking about?
Well, not a 4-day week, but in terms of something which demonstrates the effectiveness, because what they're trying to do in that particular experiment is demonstrate the effectiveness of reducing working time as a means of increasing productivity. Whether my question is whether there might be a role for the independent health cover sector to try to create an experiment of a similar sort to see whether well-being products might have the same effect.
Mark, any thoughts on that?
Yeah, possibly. I mean, I think the 4-day week is really interesting. I quite fancy it myself, to be honest. But I think every conversation we have about this, and we've seen it through a lot of the webinars we've done over the last couple of years around these kind of topics. At the end of the day, to Neil's point, I think we can throw solutions and people can do mental health first aid and say, there you go, we've done that now, so everything's fine. At the end of the day, it comes down to what attitude does the senior leadership team take, and what's the quality of the line management through the organization. Because you can have the best on paper employee value proposition, if you like, with every box ticked and the most contemporary set of benefits you could imagine. But if you go to work every day and your boss, for example, is not great at giving you the space and the support you need, then almost certainly you're going to find yourself leaving the organization or feeling under unnecessary stress. So I think this is a topic that's way beyond just the provision of benefits and probably beyond us as a market. I think we have an important role to play, but we need to keep reminding people that it's not just about the product they purchase off the shelf. And I really like Neil's analogy about watering the seed that you've planted, because I don't know if people realize that enough about the effort you have to put in and the consistency around making sure this, to reap the benefits, making sure that you see those through.
So how would you say we kind of measure the key success factors for these wellbeing corporate health products?
Well, I mean, we have a strong demand. I think strong demand for them in the first place. Neil's point's a really good one, I think, about it'd be interesting to see what happens in 2-3 years' time if people have paid for something and then there's been low engagement. I think increasingly there's a thirst for data around what do we see. We know a lot about companies' employees, about what's going on, whether it's through a health assessment or through the PMI, and I'm on about anonymized kind of trends really rather than that. I don't think this is going away as an area for demand, and I think people will continue to have to show that they're spending money on this. Otherwise, they're not going to attract particularly that younger talent. And as I mentioned earlier, it's certainly some of the, for example, city investment banks. Some of the benefits they're encouraging us to consider. And Neil, I'm sure you see this now, areas that probably traditionally wouldn't have been the remit of a private medical insurer. So I don't know, egg freezing, for example, as an area where it's important for them to be able to offer that as part of their diversity and inclusion strategy, to be able to show that they're thinking about things like this to support women to progress their career. So I think this is all going to unfold, and we've all got to stay on our toes and listen to what our customers are telling us.
Do you think there's any market for private insurance products and social care? It's one of the questions from Trudy.
I'm probably a bit off-piste for me. I don't know. Neil's perhaps better placed.
I thought you might point that one to me. It's a bit off-piste for me as well. If I'm honest, I would be severely stretching if I attempted to respond to that. So I won't.
I would say the experience from other countries, which you've looked at in great detail, is that it doesn't work. And you have to have really the right sort of set of regulatory provisions in place to make it work. I just do not see it.
Okay, just a couple more questions then, and then we'll wrap up bang on the hour. How big an influence is globalization agenda from international corporates, i.e. trends coming over from the States? Now, yeah, we in the other role I've got deal with a lot of US businesses, and they're a very interesting bunch to deal with. Firstly, because they don't understand how our medical insurance, medical sector, and the NHS work. So yeah, they're very innovative in their thought process, from my understanding and perspective in the States. So yeah, I think that there will be influencing us moving forward.
I'd agree with that. I think we experience the same. We have a lot of questions around UK providers in more kind of esoteric areas that we deal with, and asking whether or not they have provision for overseas, or kind of a global footprint. So yeah, absolutely, and we see a lot of the kind of emerging trends that pressure coming from global employers.
Yes.
Just one thing to add there. I think it's definitely true for certain types of cover, like the examples I gave earlier, that big corporates would push us on. But the other thing is the digital healthcare, and the pace of development of that read across. Somebody's seen something in the States and expects it to be delivered in the UK. We're going to need to have our sort of global radar on, I think, around staying one step ahead of what's coming.
Yeah, we got asked a question the other day about removing certain elements of cover from certain contracts, because that was something that was done in the States. So you're right, we've got to keep on our toes, because generally we don't do that, do we? Okay, so we've got 4 minutes left. Is there anything from you, William, that you want to add or bring in? And what are the next steps for everybody?
Right, there's nothing I would like to bring in further. I really enjoy this opportunity of presenting this to a big audience. Yeah,
Neil, any closing remarks from you?
No, not really. I think that we need to do more of this. I think it's really interesting to get around a table with someone who is very independent, like the team from LaingBuisson's, with insurer interested intermediaries represented as well. I think this kind of thing is extremely valuable, especially when you're talking to hard data as well and trying to find meaning in it. Yeah, absolutely. It's been a very good session. Thank you for the opportunity.
And Mark?
Just one thing from me, we've talked about engagement quite a lot, and people's willingness to engage with apps as an example. Having spent all my career in insurance, but most of it not in health, it's the holy grail is to find a topic to do with insurance that people might have some interest in. Home insurance, you can't do it. Motor insurance, you can't do it. But health, if we can work this one out, it is something that everyone has a vested interest in, particularly as people get older. So I do think it's a real good challenge for us as an industry to crack that and make it something that can be really helpful to the UK.
Yeah, and thanks for that. I mean, for me, data drives behaviour, and this kind of data is invaluable. It creates conversations, as it has done for the last hour, and interesting outcomes as a result of that. I'd like to thank you, William, for inviting me to be chair. I really enjoyed it. I've been nervous beforehand, but I think it's gone all right, hopefully. Yeah, and thanks to Mark and Neil, and also to Jade, who's pulled it all together. It's been a really enjoyable session, and we look forward to seeing the report. And also, we had nearly 100 people on, and most have stayed on, so it must have been all right.
Excellent.
Cool. Thank you all.